What's good, YouTube? It's your boy, Kamapoko, the newbie FX trader who's still figuring out if a bull market means I should buy actual bulls. Today, we're diving deep into the US dollar to Japanese yen charts, and I'll even drop some crucial wisdom bombs. So stick around till the end, unless you enjoy losing all your money. No judgment here, just saying. So, how did your trading go yesterday? Mine? Oh, just another epic win. For real though, I actually ended July in the green for the month. I started trading seriously in 2025, and honestly, this is probably the first time I've actually stuck to a strategy and ended a month positive. When I first started, I was raking in like $1,500 a day with a tiny account. Sounds great, right? Wrong. I lost it all just as fast. My hands were shaking. It was like a horror movie but with candlesticks instead of monsters. Never again, my friends. Never again. This past month, I kept my trades to a minimum. But from August to October, I'm gonna ramp it up. If I can nail 3 consecutive positive months, then I'm thinking about upping my capital. What about your trading journey? Got any epic sagas to share? Drop M in the comments below. I'm planning on using your stories as a side dish for dinner tonight. Seriously, I'm starving. Alright, before we jump into today's market analysis, let's talk about yesterday's trade. US dollar to Japanese yen finally hit 150. I knew it. I had a feeling in my gut, like when you know you're gonna ace a test, but then you actually do. I bought around here, and when I looked at the 4-hour chart, it was a surgical strike. Pinpoint accuracy. My take profit was just before 150, and my stop loss was set if the 1-hour chart clearly broke below the swing low. My risk to reward ratio was 2.2, which is pretty solid if I do say so myself. For the super nerdy details on my trade rationale, you can check out my previous video or my blog. Oh, and by the way, I'm trying to share as much of my market analysis as possible on the YouTube community tab, so hit that subscribe button if you haven't already. And yeah, my blog has even more detailed, serious market analysis every single day, if you're into that kind of thing. No jokes, just pure data. Mostly. Okay, let's get into today's US dollar to Japanese yen analysis. Usually, I only look at the weekly chart at the beginning of the week, but we're at a pretty crucial price level, so I'm making an exception. Don't tell my trading coach. Here's the weekly chart. The recent low is here, and the last swing high is here. Until we clearly break above this, I'm still bearish on the weekly time frame. Right now, we've climbed up to the level of that last swing high. Today's the day this week's candle closes, so that closing price is going to be super important. From the looks of it, the lower time frames are showing some serious upward momentum, like a rocket emoji kind of momentum. Next up, let's peek at the daily chart. Here it is. On the daily, we've got a clear uptrend, and this is the last swing low. So until we clearly break below this, I'm bullish on the daily time frame. Now, this is where it gets interesting. This is also the weekly swing high. So while the buying power is strong, we might see some selling pressure creeping in. Long term, there's a chance we could get rejected at this level, from something like a double top, which sounds like a fancy ice cream cone, but it's not, and then potentially reverse into a downtrend. But if we break through, we could see a quick surge to the next resistance level. It's like a choose-your-own-adventure book, but with real money. Let's move on to the 4-hour chart. Here we go. The 4-hour is also still in an uptrend, and this is the last swing low. So until we clearly break below this price, I'm bullish on the 4-hour. I'm also keeping a close eye on this previous high line right here. It's like a secret handshake with the market. Finally, let's check out the 1-hour chart. This one's a little messy. Some folks might draw their waves like this, others might see it like that. And then there's probably a third group who draws them in interpretive dance form. Who knows? I'll keep an eye on this price level, but I'm not entirely convinced it'll be strong support. I'm more focused on that previous high on the 4-hour chart. It's like choosing between a really good friend and an acquaintance you just met. You know who you're gonna hang out with. Alright, based on all that pro-level analysis and a sprinkle of good luck, I'm gonna share my brilliant trading strategy for today. I might make this members only one day, so soak it all in now. I'm still looking for buying opportunities on dips. That weekly swing high is a pretty strong resistance line, but right now, the buyers are just too strong. So, I'm still aiming for those buy the dip moments. Looking at the 4-hour chart, my target area is right here. The previous high on the 4-hour. If that doesn't hold up, I'll still be looking for buys as long as we don't break below the 4 hours last swing low. And of course, I'm keeping my eyes peeled on the 4-hour 21-day moving average. It's like my comfort blanket in the chaotic world of trading. Right now, the price is super high, so I can't just jump in and buy. It might keep going up, but there's a high chance I'd be buying at the very top. Classic newbie mistake. I'm gonna wait for a pullback, then consider a buy entry. If it doesn't drop, I'm just gonna ignore it. Like that friend who always bails on plans. And one super important announcement. Today is the US non-farm payrolls release. That's 9:30 p.m. Japan Standard Time, or 10:10 a.m. New York time. Make sure you check your local time zones. I'll drop a link to an economic calendar in the video description. So, that's pretty much it for today's analysis and strategy. If I think of anything else, or if the market decides to pull a fast one on me, I'll update it on my blog. Just for your reference, of course. Alright, that's a wrap for today. On this channel, I'm gonna keep dishing out market analysis and my own trading adventures. So if you're into that, Hit that subscribe button, smash the like, and drop a comment. Only if you're interested, no pressure. See you next time, and happy trading. Or at least, less terrifying trading.